Record-breaking weekend for Thanksgiving shopping. That's according to new numbers out from the National Retail Federation. Here with an exclusive look at the data, Matt Shay, CEO of NRF. So what broke records exactly, Matt?
Well, Sarah, it's good to see you. Everything broke records. Our forecast was that we'd have 166 million people out shopping this weekend. We actually had 196 million. That's 20 million more than a year ago. It shattered our expectations, and I think it told us a couple of things. One, it told us that all of us as Americans are looking to get back out and be engaged in social activities, to go back to some of those pre-pandemic behaviors we missed the last two seasons. We saw that. We also saw big promotions, big sales. So we know consumers are coming out looking for those kinds of opportunities, and that retailers are delivering great benefits to them, and they're finding deals.
So it's the traffic numbers that are most surprising. I wouldn't be surprised to hear that Americans spend more because we're paying more, even with the promotions, right, Matt? That has to be reflected somewhere here.
Yeah, that's part of it, Sarah. But of course, there are different measures for inflation, and the inflation measures that get used, we use PCE as the Fed does, but that also includes services. And depending upon what kind of customer you are, if you're paying for gasoline, if you're buying a car, if you're paying for food, we've seen a lot of inflation there. But on apparel and other items, there's not been as much inflation. So there are real deals there, and there's real growth there, positive real growth, even in a challenging economy like this one.
I mean, one thing is for sure, it's not recessionary type behavior, is it? We just had Liz Ann Saunders from Charles Schwab said we're in a recession. We're in rolling recessions. That's because the Fed is tightened, and that's what we're feeling. But it doesn't sound like that's what you're seeing from the consumer.
Well, consumers are clearly aware of inflation and price increases. They tell us that in their surveys. And yet, for 30 consecutive months, we've had increases in year-over-year retail sales. So consumers keep finding ways to power the economy, and they keep staying out there shopping. And as long as the labor market remains as tight as it is, with 10 million jobs unfilled, 5 million people self-identifying as actively looking, we've got almost a 2-to-1 ratio of open jobs to unemployed people. That's going to keep wages up. That helps consumer confidence. If we can avoid a self-inflicted wound like the rail strike that brings our economy to a screeching halt, I think we're still in shape for a good holiday season. Consumers have only done half their shopping. They started with a big weekend. There's a long way to go. I think we're still in pretty good shape for the rest of this year. We stand by our forecast, 6 to 8%.
Yeah. Okay, so I was going to ask about the rail strike. It looks like Congress will move to avert this. We'll see if we can get a bill. It looks like there's bipartisan support. What would, if they can't, and we do see this take effect, what would that mean for the retail industry?
Well, I think for the economy broadly, certainly for the retail industry, it's going to mean there are going to be some goods that aren't in the places that we need them to be. It's going to drive up shipping costs as shippers look to move things off rail into other modes of transportation. But I think the impact to consumer psyche, to consumer confidence, we've seen this before with government shutdowns, with the fiscal cliff over the last decade. It takes a real toll on consumers, and it'll have real effects. We could see plants idled. We could see furloughs, layoffs in manufacturing. We've got food insecurity issues if we can't get fertilizer and food transported. So there's a whole range, I think, of knock-on effects, all of which would have the impact of really damaging consumer psyche at a critical time for the economy. So we feel pretty confident based on our conversations with members on Capitol Hill. They're going to get this done. We're certainly glad to see President Biden come out yesterday and last night and give his strong support to congressional intervention. And I think it'd be the best thing for the economy to just remove the uncertainty as quickly as possible.
But just to be clear, it doesn't threaten holiday sales, does it, Matt? Because isn't that inventory already in stores, in stock? It's not necessarily going to disrupt that near term, would it?
Yeah, I think a lot of the inventory is in distribution centers. It's in stores. It's in transit in places where it can be accessed via trucking and other modes of delivery. People are going to go to stores and pick it up. But if the rail lines shut down and all that freight's got to get diverted somewhere, it's going to go onto trucks. And that's going to push off the other inventory that's there. That's going to drive up prices for everyone. That's going to get passed along throughout the supply chain. And Secretary Buttigieg has done a lot of work on this and talked at length about the kind of recovery we've seen in the supply chain. The last thing we need to do now is put more pressure on the economy in that way. And I think really just driving up the challenges consumers feel as we get into the end of the year.